Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the home business community. All right, so today we are talking about the settlement between the Department of Justice and Liberty Tax. Y'all, there's a lot here to unpack. I'm going to give you a forewarning that this might be a lengthy one, so just know that it's long, and hopefully you have a video speed controller. You can probably speed this baby up to double speed, but I talk fast, so I don't know how that's going to work out. All right, so let's get down to the complaint. So and let me tell you my sources, because like people, want to know where I get this stuff from. I don't pull this stuff out of thin air, y'all. I go and get some sources. So from the Department of Justice, all right? So it says that through its stores, Liberty filed approximately 1.3 to 1.9 million tax returns each year between 2015 2015 and 2019. And for tax years 2012 to 2018, Liberty claimed over 28 billion with the B in federal tax refunds on behalf of its customers. Okay. And it says that according to the complaint, the returns prepared by franchisees and filed electronically with the IRS flow through Liberty Tax before they are filed. And Liberty, the government says, hey, Liberty failed to maintain adequate controls over our tax return prepared by its franchisees and failed to take steps to prevent filing frauds or fraudulent returns, despite having the capability to do so. So I want to stop right here because I know a lot of people that follow me have their own service bureaus, right? Where you have tax return preparers who file tax returns under you, whether they have their own EFIN or they use the parent EFIN. Listen, you can be on the hook for these screw ups too. This right here is what tells you that, okay? So if you have a service bureau and you've got people who are perhaps using your EFIN to file, you better be reviewing these returns to make sure that they're accurate. All right, so so let's get down to what they were talking about that Liberty was actually doing. Okay, so, and this is from Forbes. I love me some Forbes, okay? But anywho, so it says that according to the complaint, for tax years 2012 to 2018, approximately 41% of federal income tax returns that Liberty Tax electronically were filed with the IRS included the earned income tax credit claim, more than double the rate of other returns electronically filed during that period. Now, let me explain why that is. So when the tax franchises period, it's not just Liberty Tax. You've got Liberty Tax, Jackson Hewitt, H&R Block. Trust me when I tell you these are all the same people, right? Because John Hewitt, let me give you just a quick bit of history. John Hewitt, he worked with H&R Block. Him and H&R Block didn't get along. So then he went and founded Jackson Hewitt with another partner. Well, they decided, the Jackson part of the Jackson Hewitt decided they didn't want to play together anymore for whatever reason. I don't know if it was amicable or what. I didn't get that much into it. I didn't care. But at that point, John Hewitt went to Canada and then started Liberty Tax because he had the non-compete, right? So he went to Canada, started Liberty Tax, and then after 5 years, I think it was, brought it to the United States. So John Hewitt has been involved in all of these companies, okay? So this is why I say they're the same people. And this is why like most of their practices are the same, like how they price their tax returns and all of that same stuff. Okay, now, so what it says that these Liberty Tax franchises and company-owned stores were doing, it says that Liberty Tax franchisees recruited customers, including the homeless, and then prepared fraudulent federal income tax returns on their behalf. To boost their income, they reported fake wages earned from household work, like housekeeping or babysitting or something like that. In 2015, one of the Liberty Tax franchises prepared over 1,000 tax returns that claimed the household work income and the earned income tax credit. The fraudulent returns included 350 tax returns that reported the exact same amount of household income of $6,400, and included over 300 returns that reported precisely $7,200. Didn't I tell y'all about them even numbers that sends off red flags? I told y'all, okay? I told y'all this stuff. All right. Now, and it also says that in January of 2014, the company and its CEO at the time, John Hewitt, received complaints that the franchises had prepared tax returns falsely claiming the earned income tax credit linked to this household income. Nonetheless, the number of the returns claiming the household work income increased. And it says also in 2016, Liberty Tax conducted on-site compliance review of one franchise and found errors in over 80% of the earned income tax credit claims. 8 out of 10, there was something wrong. The company gave the franchisee a failing earned income tax credit compliance grade, but did not terminate the franchisee until the government initiated a civil enforcement action in 2018. So you knew in 2016 this franchisee was off the chain, you did nothing, and then you decided to do something when the government enforced some action. This is a problem. So other things that they did wrong: claiming false dependents, false claims of expenses, and fraudulent claims for refundable education credits. There were other violations, y'all. They were sharing preparer tax ID numbers. No. They were sharing P10s, which allowed employees that did not have preparer tax ID numbers to prepare tax returns. That is a no-go at this station. And so, oh honey, there's more. This is when I tell you it was long. And it says that according to the complaint, also for tax years from 2012 to 2016, the IRS assessed over 25,000 separate penalties against tax return preparers for tax returns prepared at Liberty franchises and company-owned stores. For tax years 2012 to 2017, 20,000 of the 28,000 audits of Liberty customer tax returns resulted in changes to correct false or incorrect items reported on each return. 70%. 20,000 of 28,000. Are you kidding? So, under the settlement, though, they got some conditions on this settlement. And so first of all, the Liberty is going to have to pay $3 million to the IRS. And they've got to get into some compliance. Now, one of the conditions is that they were permanently barred. Liberty is permanently barred from engaging or employing certain individuals going forward, including John Hewitt, the founder. You can't go back, bro. Okay. They've got to implement some enhanced compliance measures. They've got to conduct a minimum of on-site compliance reviews at its stores. They have to disclose any of the fraudulent stuff to the United States. They've got to use mystery shoppers and placing automatic holds on tax returns. They have to enact specific verification requirements at Liberty Tax stores for tax returns that claimed itemized tax deductions or report certain forms of income to claim their earned income tax credit. That means that they got to really start going through these returns with a fine-tooth comb. That's what all this means. And then they have to engage a third party that's approved by the government to act as an independent monitor. And they also have to maintain the whistleblower program. The hood calls it snitching. The government calls it whistleblowing. All right. So that Liberty employees, franchisees, and franchise employees can report suspected fraudulent activity. Y'all, this is rich. So let's talk about how Liberty Tax has so many of these earned income tax credit claims. So like I said, Liberty Tax is on the hook because they got caught doing some funky stuff. Okay. And, but all of these franchises are in middle to low income neighborhoods, and they're there for a reason, because these are the people that are getting the largest refunds. So when people sit down and they're looking at getting an $8,000, $10,000 tax refund for the earned income tax credit, then, you know, people aren't necessarily paying attention to how much they're paying for the actual return tax preparation. You're also talking about being in communities where people may have poor credit or credit so bad that they can't get bank accounts, right? So people are having to go to check cashing places to get their income tax checks, get them cash because they can't deposit them into a bank account. And so that costs money, right? They can go to check cashing places. I've even seen to go to places like Walmart. So they're already paying fees. Because they're convenience store fees. Like I also want to make sure I'm not hating on tax franchises, not at all in any way, shape, or form. Those franchises, they provide a service, but they provide a service at a premium. It's just like going to the convenience store to buy milk, right? You know, at the grocery store it's going to be cheaper, but if you got to go to the convenience store and buy milk, you're going to pay a premium for that convenience. Okay, that's what it is. So these tax franchises are in these neighborhoods for those particular reasons, because of those large refunds, and then the people, there's focused on the refund and not really what they're paying for these tax returns. So that's why there are so many. Okay, and so it's not like. So it's not like it's just, suddenly out of the blue. That was the blueprint of it all, right? That was intentional. So yeah, like, and this really caught me, because this is where I started my tax career. So this is why I'm saying I'm not hating on tax franchises at all, because if it wasn't for a tax franchise, I wouldn't be where I am now. This is where I got my start. However, even in that setting, like there were some times where it was very hard for me to work there. Like I went home and talked to my husband one day, and I was like, babe, I don't know about this. And he was like, listen, you're there to learn the business. You go learn the business. When it's your business, you can do what you want. Until then, you do what you're hired to do. We, saluted, yes, sir, about face, and march forward. But yeah, so it is not surprising to me that this fraud was there, because it's not just at Liberty Tax. Liberty Tax is on the hook because it's got these franchisees that they should have had control of. This is happening in the streets all over. Every week, I can give you cases of where tax preparers are being sent to jail because they are preparing fraudulent returns in order to get people refunds that they are not entitled to. And when the IRS catches these refunds that they're not entitled to, these people have to pay that money back. How many of you know that these folks have probably already spent that money faster than they got it? So now you not only have you committed fraud, you have also put people in jeopardy with the IRS, because they have to now go and pay back money that they shouldn't have gotten to begin with. And so this is why I tell you, like, people are talking about the government is preying on poor people. I'm here to tell you that it's not the government that is preying on poor people. It's stuff like this that preys on poor people. Okay, this kind of stuff, this fraudulent stuff, because you are putting people in jeopardy and you think they'll never get caught. And that's not the truth. So, so I know going forward, Liberty is going to be making changes. They have to make changes. I know this is going to hurt some people's franchises, because you know what? The franchise I worked at was all on the up and up. We did everything by the book, but it doesn't matter. The public sees one Liberty Tax as all Liberty Tax. So I know it's probably going to hurt some people's businesses, but this is the price you pay. That's exactly what it is. So I encourage all of my taxpayers that listen to me to really understand what is going into your tax return. If you read the forms, it tells you what it's for. So when you see a Schedule C profit and loss from a business and you know you didn't have one, you need to walk away. I don't care how good that refund looks, you need to walk away, because it's not your money. If you didn't have a business, it's not your money. Right? It's not an entitlement. And this is where we get to, that we get so comfortable breaking the law. And then when people get caught, we want to cry the blues and say, oh, someone's out to get us. That is not the truth. Prepare your returns as if you knew for sure that you were going to get audited tomorrow and everything will be okay. Don't play Russian roulette with your tax life. And especially when you get caught claiming these credits that you're not entitled to claim, then you won't be able to claim them when you actually do qualify. Don't put yourself in that situation. Poor people, we talked about the earned income tax credit. When it was created back in the 70s, it was called the Poor People's Tax Credit. It was designed to help keep people with low income above the poverty line. That's why it was created. It later on became the Earned Income Tax Credit, and it stuck. This is our highest paying tax credit. This is a credit that is a refundable credit, which means that you get back more than you pay in. This is why people who make $10,000 a year wind up with these thousands of dollars of tax refunds, because it's a refundable credit. But understand that this is the most money that these people will see in their entire lives. I remember a case that I did. A tax return that I did. It was a couple that had 3 kids, and they did not make $24,000 between the 2 of them. Okay, they got an $8,000 refund. Now, to put that into perspective, you've got a $24,000 that they're paying taxes on throughout the year. And then you've got an $8,000 refund. So even if they paid 0 taxes, we're talking about $32,000 in a household of 5 for a year. That is not a lot of money. So this is why I tell you, as a taxpayer, as a consumer, you just have to be smarter about these things. As a tax professional, I'm telling you, you better be on your P's and Q's, because the IRS has already announced that they're going to be conducting audits, these random pop-up type audits, to where they're going to be looking at your due diligence requirements. And if you have not performed your due diligence, that's $520 per occurrence. I ain't trying to write them kind of checks. So, all right. I told y'all this was going to be a long one, but I'll also link these articles for you to read and review yourself, because it's not just, the world according to Lysandra, right? All right. So, guys, thank you so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I will see you all next time. Bye.